right, good evening, everyone. This is Joe Henches with Beyond the Chart, and this is a market preview for Friday, December 13th. Yeah, it's Friday the 13th. Gosh, I didn't even realize that. Well, we'll see. We'll see what happens with the market. It is in a little bit of a downdraft here, so we'll take a look. Well, we've had three. I don't know if you count this day as a down day, but three solid down days in a downdraft, down 104 points today. I honestly think I was looking at some of the 30-minute bars intraday. We had 5 waves in this wave here, which is usually the sign of the next move. Whenever you get 5 waves in a direction, and we got a 3-wave counter move up here, and then on right about midday on the 9th is when we peaked. And then we've had like 3 waves, actually a 4th rally wave today, kind of came up off the bottom. I think we got one more little push down to complete this 3rd wave, what I'm calling a 3rd wave, the 2nd leg down. 1, 2, 3, okay? And I'm looking for the Dow to kind of bottom around the 662 to 675. It's kind of a narrow little range, but basically right above in here. We may push and test the 50-day moving average. I mean, that's totally possible. Now, at a minimum, I'm saying I think 662 to 675. We could easily push down below here, okay? And I think we are in this, starting another move down, or starting a new move down. I think this is the top, but there's no guarantees. The market's going to have to show us that that's what's really happening. I mean, this could do like an ABC type thing and turn around and start to go back up again. Now, after we get down here, okay, after the 3rd wave completes, I'm expecting kind of a ABC sideways move for maybe 2 or 3 days, and then a 5th wave down. Okay, so I would not be surprised to see us even come all the way down and test the 200-day. Heck, we tested the 200-day in October. So anyway, that's kind of what I'm looking at here. The S&P 500, very similar. You're seeing the 10 cross below the 20. Of course, the 10 is crossed below the 20, and now we're trading down below the 10. The Nasdaq was in a pretty solid uptrend channel that you can see in the blue lines here. Blue or purple. I'm partially colorblind, so whatever that color it is, lavender, I'm not sure. It kind of hugged the upper end of the channel, and I commented last time that I thought a lot of little narrow bars, thought we were getting a little tight, not a lot of momentum pushing up here, and then now we're rolling over here. So this little trend line in here looks to have been broken, and this is going to, depends on how much the strength of it, but it's going to pretty much do what the Dow and the S&P, does too, I think. New York Composite is a little more interesting. It's a little weaker, actually. You can see it's already down below the 50-day moving average, and it's broken this trend, and it actually looks like it's a possible, although the symmetry is not the best, it looks a little bit like a shoulder, a head, and a short shoulder, okay, and breaking a neckline in here. And if you break the neckline, then the measuring move is from the head to the neckline, and at the point of break, that same distance down, okay? So anyway, that's a possibility. This wedge is probably the stronger possibility in the fact that when they're bearish like this, you have a tendency to correct all the way down to the bottom of this at a minimum, the start of the wedge. Well, that so happens to tie right in with the 200-day moving average. So that's something to think about in watching the New York Composite. I want to go to the VIX. Yeah, the VIX. I talked about this 2 days ago. We were down here, right? And I said, I really think we're going to come back up, test this at a minimum. Well, we did that last 2 days. I don't think we're done, because when you look at the last couple rallies, we're up in here. 17, 18, 17 and a half, 18 at a minimum on the short rallies. On the bigger ones, we're way up here around 21, 22. So I think, again, we've got a little more of this push still to come. And short-term trading index, the 10-day is pulling up now. You can see we had a little bit of a higher reading here. Whenever you start to get the high reading, as you know, it has a tendency to kind of bottom a little bit, but nothing even close to the readings that we got over here in August, in the bottom in June, back in April. So we're not there yet. And the high-low indice has, you know, sold off 259 more new lows than there were new highs. So the net was minus 259 today. And this downward sloping trend line has, you know, been a great, you know, predictor here. And this has started to roll over. Now you can see that we're back down at a level that's where we've been in the August sell-off and the June sell-off. Okay, so we'll keep an eye on this. Now it could go a heck of a lot lower. See, I arbitrarily drew this minus 500 and the plus 500 based on where I've seen some boundary lines. Okay, but it can go. Let's go back to 2011. It could go a lot below that in tremendous sell-offs. So. Let's see. I'm going to take a look, because we had a down day today. I'm going to take a look at the 3 biggest percentage losers that we had of the 38 I follow. SunPower was the biggest percentage loser. It was down 2.07. That's not a whole lot. Actually, it's kind of surprising, but breaking a little bit of a trend line. It's rolling over, and it's interesting. Let me get rid of the crosshairs. It had come down to this point here before, 27.74, and I remember watching it closely this day. Went down, and I was thinking, I had looked at the resistance that was in here. Where was the average close of this cluster of prices? Well, it was 27.82. Well, guess what? That day it got to 27.86 and turned around on a dime and closed all the way up like this. Well, now we've come back down. We've closed below this level, so I would not be surprised to see this continue to break. Now, let's see. CRE, where is CRE? Here it is. CRE's another one. This one, I'm really not sure from a bigger picture what it's doing, although I do think there's a possibility we got a double top in here. And the classic reading on the double top is when it breaks the low between the two high points. And we seem to be rolling over and maybe taking a shot at that. Now, you got the 50 below the 20 below the 50. And that happened over here, and then we got the 10 crossed the 20 and it popped up. But, it wasn't a strong move. It was still, you're thinking, oh, I'm great, I'm in good shape, and all of a sudden, whoops, they opened down, 15 points, 12, 13 points below. So, right now, this is looking like a weaker situation than it is a stronger situation. Plus, it just broke this little trend line in here. Okay, and the last stock I'm going to look at today is C-Trip, which I looked at, I think, a week ago Wednesday, and this looks like a little bearish flag. Okay, so a little bit. Imagine an upside down pole, and the flag is waving upside down. Okay, so this is a bearish flag to me. And we've broken down below that bearish flag. You've got the 10 below the 20 below the 50. They're all trending down. And you got this big reversal yesterday where it had, you thought, well, maybe we're getting a rally. Maybe we're going to go. Okay, well, you moved up, got to a higher high, came down, and closed below the low of that day. Kind of an outside down day. So the outside bars, and it was a down day, and then it had followed through today. So this is looking negative. Almost running out of my time here, but I just want to say that what I try to do is look for a correction on this, because I think this is like a first wave. So it's like you're looking to see where will it pull back to, and this is not going to be good. Well, anyway, you're going to look back to a 50 to 61% target area that's going to be back down in here. At a minimum, probably the 200-day moving average. That's about it for today. We will talk to you this weekend. Have a great Friday. And this has been Joe for Beyond the Chart. Take care.